Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. And if you are new around here, every single day at 1 p.m., we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space and also the markets. And that's exactly what we're going to be doing in this video. Satoshi is back. That's where we're going to be starting an account under the name Satoshi Nakamoto that last tweeted 5 years ago talking about Bitcoin and its peer-to-peer electronic cash system has resurged and tweeted about 16 hours ago talking about the different aspects that were not explicitly contained within the white paper coming out over the following months. So we're going to be exploring that. This account apparently is linked with Craig Wright, somebody who I do not believe is Satoshi Nakamoto. And wouldn't it be interesting if Satoshi officially made a return? This is just a little bit of a kind of speculative thing that we're going to be looking at to start the video off. And then we are going to be diving into the Bitcoin price action. You guys know that we do still believe that there is the risk of a downside scenario. It ultimately still would play into our kind of crypto spring being here. You've had the initial kind of lambs being born. But the weather is certainly turning up and the days are getting longer. If that makes sense. But we have really highlighted the dangerous macro situation which continues to be flashing us. This is very unusual dollar price action. You've got the debt markets that continue to throw it down, and you've got gold, silver getting hit pretty damn hard, the stock market in a lot of uncertainty, and of course the dollar and the yields getting a bid. That's typically macro, bad for risk. However, Bitcoin's somewhat swimming against that tide, but is it doing it efficiently enough? Okay, and we've looked at the danger of an A, B into a C after a 5-wave impulse. We've identified that there's an Elliott wave theory structure in here that could see a deeper correction that would also line up and give confluence to this inverse head and shoulders. So I really want to reiterate that. It's very interesting that our inverse head and shoulders target that we discussed on Patreon actually got hit and you've rejected since then. What happens now is going to be key, and essentially you are just still in a range environment. And you need to get to either the up or the downside of it. The upside of this, taking 30K, that's going to lead you to 40K very quickly. The downside is going to see a deeper correction down to about 20. And then what happens there is going to have to be explored. And then we've got a number of other interesting things to talk about. JP Morgan, of course, bearish as always, weighing in on the kind of macro situation. They think rates could be going to 7%. I don't know what that world would look like. Then we'll do a little bit of macro housekeeping. You've got JOLTS, coming out. You had PMIs yesterday for manufacturing. And then, of course, you've got the big one, which is non-farm payroll. And there was an interesting article or publication, PDF, I should say, actually published by the IMF, talking about assessing macro financial risks from crypto assets. So, as always, we have a lot to get into. Let's get this show on the road. So, 16 hours ago, there was a tweet from an account named Satoshi Nakamoto at Satoshi. Now, I do not believe that this is the real Satoshi. And the account allegedly is owned by Craig Wright, but has been proven a fraud. He controls this account and it should not be trusted. That's not our own words. That's the, for somebody that's very good at throwing lawsuits around, that's the words of Twitter, the kind of reader ad context they thought people might want to know. So we don't know if that's the case or not. But the last time this account tweeted was 5 years ago, and 16 hours ago, you had Bitcoin as a predicate machine. Over the following months, we shall explore different aspects that were not explicitly contained within the white paper. These aspects are all parts of Bitcoin and are important. Some of these ideas were touched upon in the early years. Now is the time to explorate and explain. Very interesting. In the comment section, of course, was, as you would expect, but very interesting, and I often wonder what would the return of Satoshi look like to the markets. He is the largest Bitcoin holder with 1 million tokens. I think we yet to see how this whole Satoshi story ends, and if you even believe it and you don't believe that it was kind of a Trojan horse Bitcoin into a new financial system, and that's how they kind of introduced it. You've got papers from, talking about cryptography very early back from sort of government organizations. It's a very interesting concept. But just to comment on this, I do not think that this is the real Satoshi. We are seeing the rise of ordinals, and I wonder what's meant by the aspects are all part of Bitcoin and exploring these different aspects. It's going to be very interesting to see, does Bitcoin have hidden powers that are going to be brought up to the forefront over the coming weeks? Well, we'll see. Just a bit of interesting mystery as we enter spooky October. Let's dive into the price analysis, guys. You know the plan for us. We took a long position on the crypto markets down here. We've been very validated. We've had continuous validation across a number of markets. Altcoin's been a bit of a sticky period for us. You guys want to find out what I'm buying, where I'm buying, please do consider becoming a Patreon. This is literally how well we've played this market. We weren't the first out, but we may have been the first back in hopefully the right time. There's still quite a bit to be determined and proven on that front. But Bitcoin right now is still in this range. We did expect to run to 28,500. And it's a little bit worrying. There was also confluence with this inverse head and shoulders that we had here. You can see your right armpit, your head, and your left armpit, and obviously shoulder. You hit that target perfectly, you pulled off, and it's kind of consolidating at point of break. So is this a support and resistance flip that you're going to build upon? Or is this going to actually set up what is going to give us our downside scenario of, first of all, a deeper ABC correction, which is also going to give confluence to, and we'll use the official head and shoulders tool, although I don't actually like to use this tool. I think it just clogs up the charts. I think just putting a simple RS head and LS is easier. Is this going to be is this going to play out? And I think the macro markets actually support downside. However, that downside is very much playing out. Of course, it's going to give you a target just under 20K. That would be a big, nice, significant round number that we think we get a bid and ultimately set up for more broadly something like this. And your third wave is going to be your biggest. So that's the downside that we're worried about. Your bigger markets, I've got to ask myself the question, what the hell is the dollar doing? And we've said continuously, the dollar will run into resistance, but don't bet on it, right? When something like this gets moving, don't get in front of that moving train, I should say. But the trend is your friend. Don't bet against that. We've assessed that this is now a stage 2 breakout. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green. I don't know when the last time we saw this for the dollar was. And is this a representation of the macro uncertainty? Talking about macro uncertainty, gold, which we assess is going to 3,000 and above. We do think printers are coming back. We did a great video on Sunday where we really looked at that in a lot of detail and explained it in a far higher level than I think 99.9% of crypto YouTube could possibly fathom. Forgive me, guys. The arrogance is just sickening, isn't it? The silver getting really hit hard. Stocks in a bit of indecision. We have higher projections. Generally, our macro assumption is that stocks are going higher eventually. Gold is risk generally, and there's going to be a whole load of printing. The important markets really are the debt markets. I mean, this has just changed this is seeing continuous downside. Here is where they stepped in for Silicon Valley Bank, and here is where the market's got a bid. And since then, it's continued to roll. Same with the gilts in the UK. They're going to have to likely step in again. Japan's already announced extreme buying. Real estate's continuing to getting smashed. And this is, I would say, a good representation of risk and the macro being against, the headwind being against risk. However, Bitcoin doing okay during that. And is it just as a result of very low volume and lower kind of institutional players being involved in the crypto space? Or is it that there's genuine sense there and genuine strength there, And Bitcoin and crypto is going to change all our lives and be used in all of our lives daily. Okay, that's coming, and that's why why we're here as investors. We want to gain those opportunities, but at the same time, it still has. That's what I would say is an inevitability. The road to getting to that is what we're trying to work out from a price point of view, and you can definitely see, certainly with this being maybe a little bit of confluence to a perhaps downside scenario playing out. Again, where do you then go back bullish? Well, obviously, when you take this level and you get above it and you hold it, this is really what we need to see. Maybe this now does act as support, and then you see the confluence to the upside. You just don't want to do this, and actually, that could be your run. and your right shoulder. Because that's going to set up downside. It's going to induce a whole load of fear. And if the macro is not there to support you, you are just going to slip. A lot of our altcoins doing very well. Solana was something that we highlighted as a potential bid coming up soon. There's a number of others that we are highlighting. But this is really where we're at from a price point of view. And the macro, I don't really think supports it. This is from JP Morgan. And that, by the way, I also want to say this. That doesn't mean that we're even short-term bearish. We're short-term uncertain, and we've maintained that stance. I can't really call it on the short term until we get above levels and we really start to trend again in one way or the other. Mid to long term, we're probably the biggest moon boys and bullish people in the room, because we really do assess that actually the demand destructive event everyone's calling for doesn't come till later, rates lag, so on and so forth. We've done lots of studying on this. Going on to JP Morgan. Investors cheer around a looming end of the Federal Reserve's interest rate hikes. Consumers' resilient labor market strength and prospects for an economic soft landing are similar to the sentiment in 2017 ahead of the global financial crisis, according to JP Morgan Chase. Yes, we concur. And we concur that the market and a factoid for the S&P will rally right up into that recession. And factoid to 2% of 2 months. So it only starts to price in a recession 2 months prior. So 2007. So JP Morgan agrees with us. The market actually went on. This is kind of what we think is ahead of you. Not only that, it put in a new all-time high. And actually what we've got on the stock market is a similar projection. Subscribe to this channel, like, comment, and share, guys. You don't get this kind of 360 analysis, I believe, anywhere. Onto a bit of macro boringish housekeeping. You got jolts today. You had PMIs come out yesterday, which were interesting. Where were we? Yes, you had a number of ISM PMIs coming out. Some good, some bad. Data's a lot better than expected. Again, we know why. Rates lag. You got jolts coming out, job openings. 30-year bond auctions in the UK. That'll be interesting. I'd love to be a fly on the wall there. But Friday, you've got non-farm. And this is going to be the big one. This is going to tilt things. Does the dollar rest there? You also will have a rest with the dollar at some point. Is that going to provide the cover of darkness for crypto to get back above 30K? We'll see. Last little bit that I want to cover with you guys before I love and leave you is the IMF's working paper, Assessing Macro Financial Risks from Crypto Assets. This was published literally 2 days ago, guys. Failure in the crypto space, including the fall of Terra, USD, and FTX debacle, Trojan horse, have sparked calls for strengthening a country's policy framework for crypto assets, including by enhanced regulation and supervision. How have these heightened concerns about crypto assets been picked up in systemic risk asset assessment? And what could be done going forwards? In this paper, we introduced the conceptual macro financial framework to understand and track systemic risk stemming from crypto assets. Specifically, we purpose a country-level crypto risk matrix to summarize the main vulnerabilities, useful indicators, potential triggers, so on and so forth. So I actually read this. You can download it. I'll leave a link in the description. It was interesting. It's always good to, in a football game, not that I play football. When I say football, I'm talking about proper football, UK football. I'm joking. Proper football's whatever's proper to you. You want to know and study your opposition. And that's why we stay up to date with these kind of articles. Regulations are the only thing stopping crypto from being multi-trillions, and it will come, and there will be casualties of it, but there'll also be beneficiaries, and hopefully we are those beneficiaries. On that note, I'm going to love and leave you guys. Have a triumphant Tuesday, and I'll see you all in the next. Thanks for watching. See you in the next.